Hey folks, Dan Frio here with your market update for October 21st, 2024. So we saw the other day, well, this is basically Friday's close. The market was flat as a pancake on Friday. So now what's the agenda for this week? Well, we don't have that much meat on the bone this week. Let's just go through the economic calendar. Today, let me put my glasses on. We had the U.S. Leading indicators that actually came in lower than expected. So leading indicators month over month in September, they were supposed to come in about negative 0.3. So retraction, it actually came in almost double that at negative 0.5. So the rest of the data we have is Fed speaker, Fed speaker, Fed speaker, all the way down to Thursday. And then Thursday, we start getting some of that information that we really need to monitor because the Fed monitors this stuff. So what is that? Initial jobless claims is right through here. That's basically the only thing we have coming out this week other than core durable goods and some things like that. That's really a light week. So the unfortunate part about that, a lot of people are going to pay attention to what the Federal Reserve is saying, those Fed speakers coming out. So that's what we're going to focus in on right now. So right through here, we have Fed official Logan saying the economy's pretty darn strong. So do we need to continue to cut rates as aggressive as we did? Right through here, the 10-year Treasury yields rise above 4.11 as investors wait for Fed speeches. And then the last piece of this puzzle is Treasury yields will test 5% in the next 6 months, and that's the concern that we have. So let's just take this caption right here. What do we know about mortgage rates? Well, mortgage rates are usually run historically. You have to add about 1.5% to about 2% to the 10-year Treasury, and that's where mortgage rates usually are. So if we get the 10-year Treasury at 5, don't be shocked if you see mortgage rates go back up to 7, and the spreads at one point are about 2.5%. So rates might even get to 7.5% again. So that's what we're really focusing in on. I don't know what the data is today. They're really shocking all the markets. But one thing coming in right now is this. It's an article. Let's just read through this, and I want to show you. It's kind of a trick that I'm playing on you guys, but I want to raise a point here. Okay, so let's read this article, and this is just out, I think, over the last couple days. The incoming information on inflation shows the disinflationary process is well on track. The inflation outlook is also affected by recent downside surprises in the indicators of economic activity. Meanwhile, financing conditions remain restrictive. Inflation is expected to rise in the coming months before declining to targets in the course of the next year. Domestic inflation remains high as wages are still rising at an elevated pace. At the same time, labor cost pressures are set to continue easing gradually, with profits potentially buffering their impact on inflation. So where's this article coming from? Well, I bet you didn't realize this is the European markets, okay? The European central banks. What are they doing right now? They have the same problems we do. So they're actively cutting rates as we speak, kind of in tune or maybe a little more aggressive than we are. And this is also playing a little bit of throwing a little monkey wrench into the U.S. bond market as well, because the European central banks are also cutting their rates at this time. And a lot of investors are buying those bonds to capture those higher yields. So there's a lot of dynamics going on right now. But the good news or the bad news is there's nothing really financially out in regards to economic news this week until Thursday. But look at what the market's doing. It's continuing to deteriorate. So we're going to see mortgage rates. They might hit 6.75 by the end of the day, and that's what we're going to focus in on later this afternoon. How's the equity markets looking at this stuff? Well, Dow Jones is down 174. S&P is down 3. NASDAQ is bucking the trend. It's only up 11. The NASDAQ up only 11. VIX is going up a little bit. That's concerning. It's at 18. We don't really want it to go any higher than that. That's basically the anxiety levels on Wall Street. Let's go over to see what cryptocurrency is. It's down $1,200 to 67,000, and oil is probably up a little bit, right in that $70 range. So we're not too concerned on inflation there. So let's get over to the CMA Fed Watch tool. It's going to tell us what the Fed's expected to do at the next basically meetings throughout the next year, and that's right through here. So this is the CME Fed Watch tool. If you're new to the channel, all you have to do is Google this thing. It'll take you right to it, and you're going to click right through here. Here's what it looks like. The CME Fed Watch tool. What's it telling us, actually? Well, it's telling us in 17 days, What's the Federal Reserve going to do? Are they going to cut rates, increase rates? What are they going to do? So this thing goes down through here, and it tells us right now the Federal Reserve, based on this chart, is going to cut rates a quarter point. How do I know? Right in this chart through here. So this chart tells us exactly what the markets are anticipating, where the federal funds rate is at the next meetings throughout the whole next year, basically until December of next year. So here's what it is. Right now, the federal funds rate is 4.75 to 5%. Okay, it's expected to go to 4.5 to 4.75 on the November 17th meeting. So that means there's going to be a 0.25% cut. And I think the market's already anticipating that, unless something really throws a huge curveball into this. And then the following meeting, there's another 73% chance they're going to cut a quarter again. And then from there, kind of the uncertainties set in. But that puts us basically into the latter part of the year, or past the election cycle, past a lot of these other things that are going on right now that might just settle. So let's just focus in on the next meeting at this point. So there's basically a 90% chance the Federal Reserve will be cutting rates at the next meeting. But other than that, there's really no economic news out for today, and the bond market continues to deteriorate. If you're out there trying to figure out, what do I do? Okay, so a lot of people watch my reports and they're like, okay, Dan, I greatly appreciate what you're doing. What do you do? Well, I'm a mortgage loan officer, actually, and I'd love to work with you. I'm licensed in all 50 states, as well as Puerto Rico. And there's not a lot of loan officers out there that are licensed in all 50 states, as well as Puerto Rico, that are also a broker. So I'm a broker licensed in the whole country. So if you're out there looking to maybe buy your first house, maybe looking to refinance, maybe looking to buy that first investment property, we would love to help you. How do you do that? Well, you check out our website. But what I want to educate you guys on, one of the first questions that we ask people is, what's your credit score? And most people they'll rattle it off just like that. It's a 720. And it's like, well, where'd you get it? Oh, I got it on this site on Google and whatever. No, there's multiple websites that you can go to when you're trying to find your credit score, but check out Credit Scores and More. It's going to offer you two different things, actually three different things that are real important. One, do you want just your free credit report just to see kind of where it is, what's it looking like? But the problem here is it's not the true credit score that lenders use. Okay, let me explain to you. When you get that free credit score, it's usually what's called your Vantage credit score. Okay, I'll say it's an educational tool that people can use to monitor your credit score. But no lender in the whole country uses your Vantage score to approve you as a loan. It doesn't count if you're buying your first house, your first car, even a credit card doesn't count. Okay, so what credit score counts? Well, your FICO score. And all those are right through here. So if you want to get a free system, click here. Don't do any of the other bells and whistles, because the free services is plenty. If you want your paid service or your FICO score, it's right through here, your true credit score. It's going to take you to My FICO. You'll get a discount code by using this system. And you're going to get your true FICO score. Now, your FICO scores are the scores lenders use to approve your loan. And if you want to have a tracking system, one of the ones that I use Smart Credit right through here. Fantastic system. It does use the Vantage score, but there's so many built-in tools in this thing. You can actually kind of dispute accounts on here. You can monitor accounts. It even tells you the day to pay to increase your credit scores. Did you know if you paid maybe a couple days prior to when you normally pay, you might be able to increase your credit scores? That's what this thing will teach you. So check all these out. But if you're in the process of needing assistance with a mortgage, go to therateupdate.com. Here's our website. If you're looking to buy that first house, check out our grant finder right through here. If you've already been pre-approved and your rate is locked in and you got 3 weeks or more to close, you want to see if we can get you a better rate, maybe lower fees, upload your loan estimate or your closing disclosure right into this loan estimate tab. We're going to review it. I'll review it actually and get right back with you with a video comparing what you have to what we can possibly get you. But if you want to put in your application, you can start that by clicking the Apply Now button right here, or you can actually call us. What most people do, they'll just scroll to the bottom of our website right through here, and they'll give us a call. Our number is 844-775-5626, or you can reach me personally at dan@therateupdate.com. Thanks so much for watching, guys. God bless. Have a fantastic afternoon. Don't forget to come back at the closing bell so I can let you know how all this mess ended for the day. Thanks for watching, folks. Take care.